Ladies and gentlemen, welcome to Somewhat Scholarly. My name is Alan Hibbard, and today I want to answer the question, why own gold and silver in 2020 and 2021? So if you didn't see my video from yesterday, I reviewed my portfolio where I shared the fact that gold and silver combined make up about 40% of my portfolio, and Bitcoin is another 40%. So in total, 80% is basically what I consider money. And one viewer posted a comment, Ilyas Hussein. So thank you very much, Ilyas, for your comment. And he says, fairly lengthy, I'm going to read the whole thing. If your net worth does not exceed at least 5 million USD, you have no business investing in precious metals. Strong claim. In that case, you need more appreciating assets like digital assets. And why Bitcoin? It is hardly the biggest mover, and it has no utility case. Your portfolio is non-optimal, assuming your net worth is not in the millions. Your portfolio looks like someone is trying to preserve existing wealth. It will not grow as much as you would like it to. You need more utility tokens, some lower risk ones like XRP, and some higher risk ones like Casino Coin or Neurochain. My portfolio is 90% utility tokens and 10% fiat for expenses. Yeah, I can definitely relate to the needing fiat for expenses. I think we all can, unfortunately. All right, so let me go through this question kind of in reverse order. I want to touch on the cryptos very quickly, and then I want to get to gold and silver, which is really the heart of the question here. So first, let me show you a chart that I made recently. This was actually in the article that I posted on Quora and Medium. How many cryptocurrencies should you own? Can you own too many? And what does diversification mean in this context? So here we have 10 of the biggest cryptos during the last crypto boom, late 2017 and early 2018. And I've indexed them to a point in mid-February, which is about 2 months after Bitcoin peaked. And you can see that they pretty much all moved the same way. So when we think about owning utility tokens and ones that might relate to casinos or neurons, or I don't know what Neurocoin is. XRP obviously is a bridge currency, and you can see here we've got privacy coins, smart contracts, hard money, currencies. There's a whole mix of things, but they all move the same way. Very, very, very similar. So in 2017, it was definitely the case that Bitcoin drove the crypto boom, right? A rising tide lifts all boats. And in the case of the last crypto boom, it was definitely Bitcoin that was the rising tide. I suspect that we will see that again. And as we think about owning utility tokens, my argument at this point in time, 2020, 2021, is that not much has changed since 2017 in the sense that people don't need utility tokens. And that the value, or I should say the price of each utility token is not linked to its inherent value, like what you can do with it. And that I think my chart here sort of proves that, at least in the case of 2017. And then I'm making a claim that nowadays the same thing is true. I think that all these altcoins are going to go up and down together. They're going to boom and bust together, right? There's no difference between bridge currencies, privacy coins, smart contracts, other types of tokens. They're all pretty much moving in the same way. So that's really important to keep in mind. And that's a hard lesson that I learned from 2017 because I basically owned, I think all of these. Maybe I didn't have Ethereum Classic, but I think I had all the others and plenty more. And I lost a lot of money relative to my portfolio's worth in Bitcoin, measured in Bitcoin. So I don't think that having a whole bunch of high-risk utility tokens is really the way to go. Let's go back here to the question. So you need more utility tokens. I don't think so, right? I don't want to pick winners and losers. And furthermore, because they're very, very similar, and furthermore, the exit window is very, very small. So let's actually take a look here. So I've got this chart which shows the market capitalization of different cryptos relative to Bitcoin. So this is basically, these five here are basically smart contracts here. And you can see that they pump and dump very, very quickly. They boom and bust very, very quickly. So let's get my face out of the way here. Okay, so this is a much longer time frame. It's not just that 1 year surrounding the crypto boom of 2017. This is, a much longer time horizon. We've got 4 years here, and these coins rise and fall very, very sharply. So what we're looking at here is basically the ability or the tendency of each of these coins to overtake Bitcoin, right? To be more valuable, to have a larger market cap, to attract more dollars into their ecosystem relative to Bitcoin's. And these projects all follow the same pattern, not just these 5, by the way. I did this analysis for something like 20 or 25, maybe even 30 coins, and they all follow the same pattern of really sharp increases and then really sharp drawdowns. And I only fit 5 here so you could actually see it. But you can see that the most recent data point here of June 2020 is that they're all very small and that they all have a very hard time gaining meaningful ground relative to Bitcoin. This is so important. The crypto space is still very young at 10 years old, and in my mind, and sort of the data suggests this as well, it's really Bitcoin that has utility as money. Bitcoin has utility as money. Everything else is hoping to have utility for its particular design, but it's not quite there yet. We don't have adoption. And the way I think about adoption is, do people need it? Do people need it? This is the big thing. Do people need it? So Bitcoin as money is totally needed, whereas all these other things are just interesting at this point in time. It's interesting for developers. It's interesting for early adopters. It's fun to play around with. It's fun to follow the news. It's fun to hear that 10 more companies signed on with XYZ coin. It's fun. It's interesting, but there are no products or services that people need. It's just not there yet. So I think that need is going to be the biggest driver of the next bull run in cryptos. And as I said before, a rising tide lifts all boats. And the tide is Bitcoin. It's Bitcoin that's going to lift the other boats. And so now the question is, what's going to cause the tide? And I think it's going to be people flocking into real money. And that's actually the heart of this video. Why would you own gold and silver? Because gold and silver are real money. So let's get back to the question very quickly. I did want to show Ethereum. It was just had such a large spike, I couldn't fit it on the previous graph. But it follows the same pattern, and so do many other coins. I won't bore you with all those charts. But anyways, your portfolio is non-optimal, assuming your net worth is not in the millions. Yeah, it's not. Soon. If my investing thesis pans out. But so far, it is. So your portfolio looks like someone is trying to preserve existing wealth. It will not grow as much as you would like it to. So this is a really good point. And I had this mindset as well for a long time. And then it occurred to me that different assets can do more than one thing at any given time. So in the case of gold, silver, and Bitcoin, it is possible to hold them for 2 reasons. 1, to preserve your wealth, and 2, to grow it. That's my thesis now. So I agree that as a general rule of thumb, gold, silver, and Bitcoin, sound money, exists to preserve your wealth. Yes. And as more US dollars are printed, yeah, it will cost more US dollars to buy an ounce of gold, an ounce of silver, or 1 full Bitcoin. Yeah. So the number of dollars would go up. However, there will be points in time where those assets are undervalued, where there is an underallocation of capital into those asset classes, in addition to their ability to preserve wealth over time, right? In addition to their ability to preserve purchasing power over time. And we are in one of those periods right now. So let me show you another chart. This one comes from Mike Maloney. 2 faces. Okay. Yeah, so this was actually a chart that I made for Mike Maloney that he included in one of his videos back in April, a few months ago. And basically what we're showing here is the gold bull market of the 1970s and the gold bull market of today that actually started 20 years ago. And we're in the last leg of it, which is also the time where you have the biggest gains. So in the 1970s, the price of gold went up 25x. That's the yellow line here. And the green line is what gold has been doing since 1999. And if it follows the same pattern, which is compressed a little bit horizontally and vertically, it will do 36x from its bottom, right? Most of that is behind us, but from its current price or from the price in April, it could do easily another 6x. And if you listen to this video that Mike made, which is a great video, by the way, you'll find out that he thinks gold will do even more than what is demonstrated in this graph. Like it will exceed a price of $9,000 per ounce. And I agree with him. I totally agree. So he and I actually spend a lot of time analyzing and researching together. And we both think it's going to be well over $10,000 an ounce for gold. And we think the gains for silver are going to be even bigger. So I didn't want to include any of the stuff for silver in this video because it'll get way too long. But I do want to compare gold and Bitcoin. And this is a chart I put together not too long ago. Let's get rid of my face here. And this is compressing two different time scales. Basically, gold, since it became freely traded in 1968 after the collapse of the London gold pool, and Bitcoin after it became freely traded, you might say, once people knew about it and there were some exchanges where it was actually easy to buy and sell it. So I arbitrarily picked January 1st, 2012. And look at the shape of these graphs. I mean, it's crazy how similar they are because they're both stores of value, which is money. That's what they are. And you can see that these are obviously log scales. And I think that in the bull market that we're currently in for both of these assets, they are going to go off the charts. And I mean that in quite a literal way with the numbers I have here. I think gold is going to exceed $10,000 an ounce. I think Bitcoin is going to exceed $100,000 a coin. And I think silver is probably going to have an even larger percentage gain. So I think the gains are going to be enormous. And let me go back to the comment here from Ilias. Yeah, let me go back to the first paragraph. If your net worth does not exceed at least 5 million USD, you have no business investing in precious metals. In that case, you need more appreciating assets like digital assets. So I just disagree. I disagree on kind of both of these things, that I don't think that digital assets necessarily are going to strictly outperform gold and silver. I think silver will be the best performer, then Bitcoin, then gold of the three. And I think that they'll probably all outperform most of these utility tokens, certainly all the major ones. And going back to the original claim here, if your net worth does not exceed at least 5 million USD, you have no business investing in precious metals. I disagree very strongly. In fact, I think that if a person only has $100 and that's their entire net worth, it would be completely reasonable to buy 4 ounces of silver. And that's it. And that's your whole portfolio. I'm not a financial advisor, so this isn't financial advice, but I'm just imagining a world in which I only had $100. Sure, buy 4 ounces of silver, sit on it for 3 years, 5 years, whatever. I think silver could do, very, very easily 10x. $250 an ounce silver seems like a low estimate to me. It could be $300, $350, maybe more. So, we will see, quite obviously, but I think that the money that I have in my portfolio, gold, silver, and Bitcoin, can all do 10x from where they are today, easily. Sure, a lot of these utility tokens can as well. However, as I showed earlier, your exit window for a lot of these things is like 1 day. Like you have 1 day. If you're not at your computer, with your tokens in your hot wallet, ready to go on an exchange, you miss it, right? And that's even if you knew that you're at the top, but it's just so hard to call the top. And it's just not a game I want to play. So if you want to play that, I encourage you to do so. Go ahead, try to pick winners and losers. You can day trade, weekly trade, whatever you want to do. It's just not for me. And my risk tolerance and my investment thesis is such that I'm very happy holding 80% money because it has been so neglected, so unloved. And I believe that people are going to start to realize that they need it. They really, really need it the way that they need food, water, clothing, shelter, energy, transportation, and so forth. People are going to need money. They're going to realize that. And so that's basically my thesis. So I would encourage people to explore gold and silver as an option. Having something physical is really, really nice. If we lose electricity, if we lose power, if we lose supply chains going to grocery stores or anything like that, it's really good to have something physical. And obviously, there's several thousand-year history backing them up. So I would encourage you, if you want to learn more about gold and silver, go check out Mike Maloney's channel. I will link to it in the description. Actually, the reason that I'm working with him currently is because I watched his Hidden Secrets of Money series many years ago, and I loved it so much. I've been following him for so long. I've recommended this series to everyone, friends, family, colleagues, people who work at Morgan Stanley and Goldman Sachs back when I was in the investing world. I told them, you got to watch this. You got to understand money. So I would encourage everyone to go watch those videos, watch them more than once, subscribe to his channel. You'll learn everything about gold and silver. And if you have any more questions that Mike hasn't answered, feel free to ask me. I'll do my best. And I'll see you guys in the next video.